Hello everyone. Thank you for coming back to video 3 of our TTS educational series. This video is going to be titled How Do Options Work? And we're just going to go over kind of a quick down and dirty behind the scenes on what exactly happens when option prices move and what makes them move. So before we move any further, I'd like to say that for a risk disclaimer, futures and options trading have potentially substantial rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets. Don't trade with money you can't afford to lose. This group is neither a solicitation nor an offer to buy or sell futures, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in any material within this group. The past performance of any trading system or methodology is not necessarily indicative of future results. Okay, so we got that out of the way, and we can move on to the Greeks. So the Greeks are, there's 5 of them. There's 5 options Greeks, and they're called delta, gamma, theta, vega, and rho. So I've attached a little chart there that you can go back and use as like a reference. We'll dive a little bit deeper into each Greek right now. So we'll start with delta. Delta is going to be the amount that an option price is expected to move based on a $1 change in the underlying stock. So what that means is, say we bought a call, okay? And say that call had a delta of 25 at the time that we bought it. That means that if we bought this call whenever the stock was trading at $40, that means if the stock goes to $41, then our options price will increase by 25 cents or $25. Okay. And delta is also thought of in the terms of that it's the probability that the specific option will end up at least 1 cent in the money at expiration. So if you're trading a 50 delta, then in theory there's a 50% chance that the option will be in the money at expiration. Like I said, that's all kind of theoretical, but a lot of people use that. And the further in the money that an option goes, delta is going to increase. Delta will increase all the way to a value of 1. And once it gets to a value of 1, it can't go anymore because it moves 1 for 1 with the underlying price. So there's nothing else that it can capture. Theta. Theta is probably one of my most favorite Greeks as an option seller, and it's known as time decay, and like I just said, it's a blessing to option sellers, but it's a curse to option buyers. So what theta is, it's the amount that the price of an option is going to decrease for a 1-day change in time to expiration. And so options are continually decaying. They are all the time trying to go to 0. Okay? So as you can see on this graph, your options premium is going to be on the y-axis, and your time to expiration is going to be on the x-axis. So you have, say, 120 days out, 4 months out. You have a lot of extrinsic value or time value built into that options premium. And you can see how it just gradually deteriorates until expiration. And it's not a linear move, it's an exponential move where the closer you get to expiration, the greater that decay is going to be. So that's why a lot of times, you know, we'll sell options that expire on the same day. We'll sell options that expire within a week, 30 days, you know, because you want to grab that good theta decay. Gamma. Gamma is the rate at which the delta will change based on a $1 change in the underlying price. So you can think of it as delta being the speed at which the option increases, and gamma is going to be the acceleration. Okay? And the higher the gamma, then the more responsive an option price is to the underlying stock. That's why on a lot of days, on the 0 DTE days, you know, it's gamma is your enemy for late day moves in either direction, because I mean it can really mess your premium up really quick. Vega. Vega is the amount that call and put prices will change in theory for a corresponding 1 point change in implied volatility. Okay? So we know that implied volatility will affect options prices, right? I think we touched on that on the last video lesson. So the higher your implied volatility, then the higher your options prices are going to be. So what Vega tells you is that for every 1 point that IV goes up, this is how your options price will change. Or, you know, for every point that IV goes down, either way. But Vega will only affect the time value of the option. Rho is really not important at all, but I figured we would go over it anyway. Rho is the amount that an option value will change in theory based on 1 percentage point change in interest rates. And like I said, it's the least important for the strategies that we trade, so I'm not going to spend a whole lot of time on it, but it's useful to know exactly what it is, I guess. This is a little shot that I got off online, and I thought that it'd be, you know, a cool explanation, I guess. Kind of funny, it looks like, but anyway, it's got the Greeks highlighted in red there, and it kind of tells you at the bottom what exactly will happen. So you can read through that. We pretty much already talked about all of that, so that'll be a good reference, you know, if you care about the Greeks. Honestly, you really don't need to spend a lot of time on them, because they're not, just don't get too caught up in them, because they're not really that important for the type of trading that we do. Probably the most important one is going to be delta, and delta being used in the way of, you know, probability of expiring in the money, I would say. So that would probably be the most important one for the way we trade. But yeah, like I said, that's just a quick down and dirty on what drives the option prices, how do they work, and In the next video, we will go over specific strategy risk analysis and profit potential. So that one will be interesting. I think it'll really help out with the kind of things that we do here. So I hope you enjoyed this lesson, and I will see you on the next one. Thank you.